Platinum doesn't get nearly the attention that gold and silver do, but for investors looking to diversify their precious metals exposure, it's worth a serious look. Today, we're breaking down PLTM, the GraniteShares Platinum Trust, and whether it deserves a spot in your portfolio. Let's get into it. So what exactly is PLTM? At its core, this fund does one thing. It tracks the spot price of platinum. That's it. No derivatives, no futures contracts, no financial engineering. PLTM holds actual, physical platinum bars in a vault. The fund is structured as a grantor trust, which is important for a couple of reasons. First, the platinum is stored in a London vault and custodied by ICBC Standard Bank. Second, and this is key, the trust structure legally prevents the trustees from lending out those platinum bars. Your platinum stays put. That's a meaningful protection that some investors overlook when comparing precious metals funds. The NAV is calculated using the LBMA Platinum Price PM, which is the London Bullion Market Association's afternoon price fix. This is the global benchmark for platinum pricing, so you're getting exposure that tracks the real market price as closely as possible. Now, if you've looked at platinum ETFs before, you've probably come across PPLT, which is the Aberdeen Standard Physical Platinum Shares ETF. It's the more established name in this space. So why would you consider PLTM instead? Honestly, the exposure is essentially identical. Both funds hold physical platinum. Both track spot prices. Both use the same London vaulting infrastructure. The differences come down to expense ratios and trading liquidity. PLTM typically offers a slightly lower expense ratio, which matters over long holding periods. But PPLT has been around longer and generally has higher trading volume, which can mean tighter bid-ask spreads. For most long-term investors, either fund will get the job done. But if you're cost-conscious and you're not trading large positions frequently, PLTM's lower fees can add up to meaningful savings over time. Let's talk about why you might want platinum exposure in the first place. Platinum has some unique characteristics compared to gold and silver. About 40% of platinum demand comes from the automotive industry, where it's used in catalytic converters. It also has significant industrial applications in electronics, glass manufacturing, and chemical production. And of course, there's jewelry demand. This industrial tilt means platinum doesn't always move in lockstep with gold. When the economy is strong and industrial production is humming, platinum can benefit. When there's economic weakness, it can underperform. That's not necessarily good or bad. It's just different. And different can be valuable when you're trying to build a diversified portfolio. Platinum is also one of the rarest precious metals. Annual mining production is a fraction of gold production, and supply is concentrated in just a few countries, primarily South Africa and Russia. That supply concentration creates its own dynamics that can affect prices independent of broader market conditions. Now, there's one thing every platinum investor needs to understand, and this applies to PLTM, PPLT, and any physically backed precious metals fund. The tax treatment. The IRS classifies precious metals as collectibles. That means if you hold PLTM for more than a year and sell at a profit, you're not getting the standard long-term capital gains rate of 15% or 20%. Instead, collectibles are taxed at a maximum rate of 28%. That's a meaningful difference that can eat into your returns over time. This doesn't mean you shouldn't invest in platinum. It just means you need to factor taxes into your decision. Holding precious metals in a tax-advantaged account like an IRA can be one way to mitigate this, though you'll want to check the rules and consider whether that makes sense for your overall allocation. So who should consider PLTM? If you already have gold exposure and you're looking to diversify within precious metals, platinum offers something different. Its industrial demand profile means it can behave differently than gold during various economic conditions. If you're concerned about inflation and want hard asset exposure beyond just gold, adding platinum to the mix can broaden your hedge. And if you're simply a believer in precious metals as a long-term store of value, platinum's rarity and industrial utility make it worth considering alongside the more popular options. The bottom line on PLTM: it's a straightforward, low-cost way to get pure platinum exposure through physical metal. The grantor trust structure provides solid investor protections. The London vaulting and ICBC custody offer institutional-grade storage, and the pricing tracks the global benchmark closely. Just remember the collectibles tax treatment if you're holding in a taxable account, and make sure Platinum fits your overall portfolio strategy before adding it. If you found this breakdown helpful, make sure to subscribe and hit the notification bell so you don't miss future ETF deep dives. Drop a comment below if there's a specific fund you'd like me to cover next. Thanks for watching, and I'll see you in the next one.